Hello and welcome to Edison TV. I'm Miłosz Paps, Director of Investment Trust Content at Edison, and today I'm joined by Tuan Le, who is Lead Portfolio Manager of Vietnam Enterprise Investments Limited. Thanks for joining us today. Maybe you can start by giving us some background of the investment strategy of Vietnam Enterprise Investments Limited.
Thank you for giving me this opportunity. Good morning, ladies and gentlemen. I am Tuan Le, Lead Portfolio Manager of Vietnam Enterprise Investment Limited (VEL), a closed-end investment trust listed on the London Stock Exchange and a constituent of the FTSE 250. VEL was established in 1995 by Dragon Capital, 5 years before Vietnam had a stock market, and we are one of the largest and oldest mutual funds in operation. The fund strategy is to deliver long-term capital appreciation by building a portfolio of quality companies that are contributing to and benefiting from one of the fastest growing economies in the world. To achieve this, we rely on an investment team of 3 portfolio managers, including myself, and an in-house research team of 20 analysts who proactively and thoroughly study every investment opportunity in the country. Additionally, ESG principles are deeply integrated into our investment process, promoting the highest standards of environmental, social, and corporate governance. We are ready to build large positions in companies in which we have high conviction with long-term growth prospects. Our longest continuous holding in the fund has been a bank we invested in 28 years ago. The average holding period for our top 10 holdings is around 10 years. We maintain a combination of top-down and bottom-up approaches, deeply understanding the macro and market environment of the country and conducting detailed analysis of companies throughout our in-house research team. Since the stock market launched in 2000, the fund has delivered an annualized return of 11.5%, ahead of returns made by the FTSE 250 and FTSE 100, which were 7.8% and 4.8% respectively.
Thank you. That's very helpful. Now, Vietnam is benefiting from several secular growth themes, including the FDI-driven growth in manufacturing, the strong urbanization trends, and the structural growth in consumption and the rise in the middle class. So maybe you can discuss Vietnam's open trade policy and how this stimulates the Vietnamese economy.
It's a fact that Vietnam has a very open economy, with export and import values nearly double the country's GDP. Vietnam's open trade policy has been a cornerstone in attracting FDI, which has significantly bolstered the country's economic growth. This policy is implemented through strategic trade agreements and enhanced bilateral relationships, making Vietnam an attractive destination for investors. Vietnam has signed 16 free trade agreements encompassing over 50 major economic blocs and countries, and more than any other country in the region. Vietnam is currently a member of several major trade agreements such as CPTPP, EVFTA, or RCEP. Let's take an example of EVFTA. The EVFTA has eliminated 99% of tariffs on goods traded between Vietnam and EU, making Vietnamese products more competitive in the European market and vice versa. It's interesting to note that Samsung currently produces more than 50% of its mobile phones in Vietnam, and Apple has been moving major parts of its production lines for iPad, AirPods, Apple Watch, or MacBook to Vietnam. Our Intel Vietnam factory accounts for 50% of packaging and testing tasks for Intel globally. Furthermore, Vietnam's strategic diplomatic efforts have upgraded its relationships with key trading partners, including the United States, China, India, Russia, Australia, South Korea, and Japan. further attracting FDI and enhancing its role in the region. For FPT, one of our top holding in technology sector, it is a prime example of positive impact of Vietnam's strengthened ties with these countries. Both the United States and Japan are the largest markets for FPT global IT services. And in April, FPT signed an AI partnership with NVIDIA and is poised to collaborate with more US firms in the semiconductor value chain. And FPT has also a subsidiary in education, chosen to become a training center supported by the United States for semiconductors and high-tech personnel.
Thank you. Now, Vietnam is currently classified as a frontier market, but it is on a path to be reclassified to an emerging market. So how important is this for the local equities, and when do you expect the upgrade to happen?
The upgrade to EM status will certainly drive a long-awaited valuation re-rating process of the Vietnamese equity market. And it's very obvious to us that the government wants to achieve that EM status. In fact, many hard numbers suggest that Vietnam's emerging market ambition are very credible. Over the last decade, the total market cap of Vietnam equity market has increased sixfold from 43 billion 10 years ago to 245 billion today. And the number of listed companies has doubled to over 1,600. Liquidity has grown from average $80 million per day to now very often exceeding $1 billion per day. And the number of companies with a market cap of over $1 billion has grown from 7 to 47 now. In all these metrics, Vietnam is quite well ahead of a number of EM countries such as Malaysia, the Philippines, Qatar, Indonesia, and Mexico. What has held Vietnam back from EM status has been a couple of qualitative criteria. One of them is the refunding issue, and for that, the local regulator is very actively working on a draft circular, a substantial step toward the FTSE secondary emerging market status. As for MSCI, however, controls such as limits on foreign ownership need to be lifted before that can happen, so it will take more time. And historically, Vietnam has been trading 25 to 35% discount in valuation compared to regional peers, despite it is offering a more attractive growth profile than most regional and EM peers in most years. We believe that an upgrade will certainly shine the spotlight of Vietnam and attract both massive and active inflows, which will subsequently help close that valuation gap. It is notable that Vietnamese market has gained a total return of 211% in the decade to end of March this year in sterling terms, handily beating every MSCI emerging markets constituent except India with 255% over the same period. And the MSCI EM itself returned only 83% in this time. In summary, we can say Vietnam is currently presenting some key investment themes. Firstly, Vietnam is benefiting from the supply chain shift from China, also known as China Plus One, and recently the U.S. trade policy of friendshoring. This helped bolster FDI inflow to around 22 billion per year. This supports the expansion of industrial parks, creation of new jobs, and the growth of Vietnamese export. Secondly, there is a high rate of urbanization, currently 40-50% and still increasing strongly. We have seen strong development in the capital market in Vietnam with a fast-growing banking system and a more sophisticated financial services. Those factors also drive strong demand for infrastructure development, which in turn will support sustainable long-term economic growth and encourage sectors like real estate, construction, and materials. Another key factor is the formation of an affluent middle class. People with higher incomes will stimulate domestic consumption, and with a population of 100 million people, very young with an average age of 33, Vietnam is a large market and with a long-term economic growth driver for the country.
Perfect, thank you. And how does Vietnam Enterprise Investment Limited position its portfolio to benefit from those sectoral themes we've just discussed?
We aim to position our whale portfolio to capture these investment themes. Currently, banks make up the largest weight in the portfolio, not only because they are the largest sector in the stock market with nearly 40% weight, but also because the banking system is contributing nearly 60% to 2024's earnings. Banks have seen significant growth over the past decade due to digitization and the rise of middle class. 70 to 80% of the population is now online. We have also aided good retail companies that can benefit from rising domestic consumption. We refer solid steel producers and quality real estate developers that can benefit from the rising urbanization and fiscal spending on infrastructure. We are also allocating more weight to the industrial park, enjoying a strong FDI trend. We strongly favor technology, especially with the very well-known company, FPT. The company can sustainably deliver about 20% earning growth per annum for many years to come and has a very strong prospect in new business areas in semiconductor, AI, data center, etc. This is especially relevant following the recent development between the Vietnam and US comprehensive strategic partnership, which focuses on the semiconductor industry and AI applications. FPT just signed an AI partnership with NVIDIA and is poised to collaborate with more US semiconductor firms. Although exports are well known for giant multinational enterprises like Samsung or Apple, our portfolio still can benefit from the rising export activities in various areas such as chemical production, software outsourcing, or even steel production, etc.
And finally, in this context, can you maybe discuss your recent new investments and disposals?
Ultimately, we are long-term investors. We typically have a big weight on high conviction stocks and ready to stay with them for the long term. As I said, our average holding period for our top 10 holdings is around 10 years. Currently, we maintain overweight position in bank, technology, consumer discretionary, steel, and real estate, including residential and industrial parks. For this year, we have a strong belief on consumption recovery. Hence, we have increased our exposure to retail companies, which so far has been paying off. Regarding disposals, we only reduce positions where we believe there is a significant adverse change in fundamentals or the valuation has surpassed its intrinsic value, or we consider some positions to become over-concentrated. Otherwise, we are happy to stay with our investees.
Tuan Le, Lead Portfolio Manager of Vietnam Enterprise Investments Limited, thank you very much for your time.